The SAFM Market Update with MoneyWeb is brought to you by the Right Choice investment from Discovery Invest. Now you can invest with the benefit of hindsight, so success is inevitable. Hello, good evening, welcome. I'm Alec Hogg. On a day when mining giants started to worry about Chinese demand and share market investors fretted about the looming global recession, we got those big stories and others covered in the next half hour. ABSA today became the first major bank to position itself for a tougher financial climate. It's freezed out its clients' automatic access to the equity balances, that's the excess balances in their home loan accounts. Executive Director Louis van Zenne will explain why. Also feeling the heat today are thousands of day traders, those people who use single stock futures to punt the stock market. Well, last week, RMB led other banks who support the market to demand that margin on single stock futures be doubled to 20%. We will look at the consequences, and there have been quite a few people carried on stretchers with the JSE's head of trading, Alan Thompson. Delphine Governor Alan Gray, David Shapiro is back in the studio. We got a whole lot more as well to cover tonight on a day when the markets unfortunately took another tumble. But first, the news. Here's Jeff Candy with the business news headlines. Jeff?
Thanks, Alec. Well, miners plunge on Rio's warning. Retail sales fall the most in 10 years. Futures traders squeezed by banks. And Brazil's Lula blames rich countries for turning the world into a gigantic casino. On the markets, the JSE down 7% to 20571, pulled down by resources and big moves there. Anglo down almost 15, or just over 15%. Bulletin down almost 11% on the day. And looking at your commodities, gold at the moment at $845.75 an ounce, and Brent crude at $70.83 a barrel. It's basically where it was almost a year ago. And in your currencies, a dollar will cost you $9.42, a pound $16.44, and a euro $12.80.
This market report is brought to you by DBX Trackers. Because you won't need to use your offshore allowance, it's the easiest way for South Africans to invest offshore.
Now, there's a thing on the JSE called this volatility index, South African volatility index. And in normal times, it trades at around 20%. But as it becomes more volatile and more fearful, that volatility index rises. When it cracked 30%, we all got worried. It's not 46% today, David, which shows that intense fear. Lots of turbulence.
I don't think you needed to look at the volatility index. You just have to look at the red on the screen. I think, Alec, what's worrying about this market is that everything moves in one direction and everything moves in the other direction. So you're finding today it was very hard to find any share that went up. If it did go up, it was very minor. And over the last few days, we've had a very broad and again, but I mean the veracity or the extent of the falls are worrying.
So who's making these decisions, these buying and selling decisions?
You know, that's a problem. We don't know. It's very, very difficult to gauge the force of the selling and where it's coming from. You can understand the background to it. A lot of bad news coming on the economic front, which is now offset the bold moves that the bankers made, that the government's made to bolster banks. Now everybody worried about recession. So you saw commodity markets coming down. Even now, slowdown in China starting to cause concern in commodity markets. So we just fell away.
We'll pick up with that with our MoneyWeb's investigations editor, Barry Sargent. Big news coming out of the whole China story today, Barry.
Yeah, Alec, Rio Tinto, which is one of the world's top 3 mining companies, coming out today with an operational update, which is excellent by itself, but that's not the story the market listened to. Rio Tinto has always been known to have a very good economics division. They do a lot of research into their markets, and they're given a special ear when they comment on markets. And what they said today, in a nutshell, is that growth in China is going to be an exaggerated fall in this quarter that we're in, the post-Olympic quarter. And the net result is going to be that the net demand from China for raw materials is only going to start to recover next year. So there's going to be something like a 6-month lag. And on top of that, GDP as a whole for China expected this year to fall to 10%, which is still amazingly high, but it's from 12% last year. The effect this had on mining stocks today, Rio Tinto in London down 16% at last count.
16.
Yeah, and it's lost 67%, this is from May this year, of its value.
So if you happen to put 100,000 Rand into Rio Tinto in May, fortunately, because of exchange control, very few South Africans would have done that. But that 100,000 Rand is now worth 33,000.
Yeah, it'd be 2/3 down, absolutely. And we saw some other huge Anglo-American, the fall wasn't that big here. It's down 20% in London today, just on the day. So this news it seems that whatever the news there is that comes out, it's been taken badly. And the Rio warning on China was taken particularly badly. It is, of course, the biggest consumer of raw materials in the world. So its marginal importance is magnified when there's a tiny change in its economic heartbeat.
There is a big exposure that South African investors have to the Satrix 40 and the other Satrix products, exchange-traded funds. Every week at around about this time, we give us an update, a message from Mike Brown, who's the manager of Satrix. Let's see what he has to say this week.
This has been a particularly difficult period to raise money for an IPO, but we had well over 2,000 new investors coming in and raised about 120 million rand purely from small private investors. So we did road shows around the country and had a significant turnout virtually everywhere we went. So people are interested in it, and the fact that it offers a completely different product. It's a value-based fundamental index, and it's also, of course, a total return index.
Well, David Shapiro, that suggests that there are some people, some brave hearts, who are prepared to go into the stock market.
Well, it's a pure value investment, and you heard what Mike said, based on a lot of research. I think if you've got courage at the moment, you're looking at some shares with 8% yields, but everybody's worried, as they say, about whether those yields, whether the dividends are sustainable. And Alec, no one can tell you. We're just going to have to work through markets almost day by day.
How much has the financial crisis now been forgotten, has been sorted out, and the attention moved across to the real economy? What's happening?
It's almost overnight. I think yesterday we were up 3%. Towards the end of Wall Street last night, we could see the worries coming in. But even Janet Yellen, who's a very, very well-respected Fed governor from San Francisco, she made a statement today which also caused a lot of turbulence in the market. She said that the U.S. was already in a recession. And as soon as they hear the R word, I think just stocks get sold.
Well, the U.S. is down quite sharply at the moment. We have seen the European markets also falling around the same amount as the Johannesburg Stock Exchange. London down 7%, Germany 6.5%, France 7%. It's cold comfort, but we aren't alone.